morning. You're watching Business World Live. I'm Danie, Laurel.
And just Delos Santos, it's the start of a new trading day, but first, let's go straight to our top story. The Trade Department will impose provisional safeguards duties on imported cars following an investigation which showed that the surge in auto imports has hurt the domestic industry. Secretary Ramon Lopez says the duties will be in the form of a cash bond amounting to 70,000 pesos per imported passenger car unit and 110,000 pesos for each commercial vehicle unit. The duties will be in place for 200 days from the issuance of an order by the Customs Commissioners and while the case is under formal investigation by the Tariff Commission. The DTI's decision is based on a complaint filed by the labor group Philippine Metal Workers Association, which had earlier raised the possibility of a link between the surge in auto imports and a decline in the domestic auto manufacturing sector. Lopez said the provisional safeguard measures will provide a breathing space to the domestic industry. He clarified that importation is not banned and consumers will still have the options to choose. Lopez said a delay in the imposition of safeguard measures would cause damage to the industry, which would be difficult to repair. Under the Safeguard Measure Act, the government is authorized to impose the temporary duties after a determination that a certain domestic sector has been substantially harmed by a surge in imports. Philippine Metal Workers Association Secretary General Ray Racine hopes that the DTI's move will save jobs. However, the Association of Vehicle Importers and Distributors described the move disruptive, saying the group does not believe that it would encourage investments. Now, inflation quickened its pace in December to 3.5%, the highest rate recorded since March of 2019. The December print was due to price increases in food and non-alcoholic beverages, as well as higher transport costs. This follows the 3.3% rate recorded in November, when a string of typhoons pushed prices of prime commodities. The December inflation data puts full-year inflation in 2020 at 2.6%, higher than the 2.5% recorded in 2019. But this is still within government's 2 to 4% government target. National statistician Dennis Mapa noted major inflation drivers in December, such as meat following supply challenges after the threat of the African swine fever. He added spillover effects from November may be likely with the rise in vegetable prices from the typhoon period. Cagayan Valley is one of the regions which recorded the highest inflation in December. All right, Dan, how is the peso trading this morning on the back of that higher inflation print?
All right, it does seem that we are weakening a touch. You can see on my terminal here that we are back to the 48.053 levels. We were inching our way towards 47 levels, with some analysts having betted rather last year that we would be breaking that level. But we seem to be weakening on the back of that, Jess. But let's move over to our equity space, especially since I'm very curious to see, how we are trading in the first 10 minutes of the day. It seems to be a bit of a pullback. You can see that quite a sharp drop at the opening. We're down by 0.7%. This after having had, some excitement at the beginning of the trading year. Note that yesterday we were up by 0.8%. So basically erasing all of those gains. We also had quite strong turnovers in the first trading day of 2021 to the tune of 10.33 billion pesos. But also, on the other hand, we were back to net foreign selling, recording 214 million pesos that we lost from our equity markets. I just want to take a quick peek at the sectors here. And which ones are really dragging down what we were hoping would be a rally this week. At least you can see financials bearing the brunt of that. That's down by 1.5%. 0.3%. You've got the rest of the sectors also quite firmly, let's say, in the red this morning. And I just want to take a quick peek at which of the financials, so to speak, are the ones dragging down their own sector and the rest of the index. You can see actually it's not necessarily the financials that are the worst hit when it comes to specific stocks, but you do have the likes of Mega World that's down by 3.1%. Robinson's Land, perhaps in the property space as well, and San Miguel Corporation down by 3%. Pure Gold as well, which is very much linked to inflation, also down by 2.3%. You still have some bright spots here. PLDT was one of the best performers yesterday. Emperador as well. So continuing those performances that we saw from yesterday. Now, I just wanted to take a quick peek at some specific star stocks, so to speak, that had rallied and opened the year with a bang, kicking off with AC Energy. Now, we had reported this deal was already on the table since November, actually. This is the GIC private investment deal, but nevertheless, that finally happened. And we did see some room to run yesterday, even after that was already, enjoying quite a rally since last November. You can see that yesterday it was up by as much as 9%. It's now at a record high. And this, of course, with GIC will be investing 20 billion pesos for AC Energy. That's effectively a 17.5% ownership stake in the company. They're up for 7 days straight, longest winning streak. And look at that. It's still up by 8.43% at the open. It's breached 11 pesos. Now, speaking of the Ayala Group, another one to be watching out for here is the parent company, Ayala Corporation, of course. This, as their president has said, that they will be spending even more this year than last year. So they will be spending 182 billion pesos in capex, and that will be up from 157 pesos that they had spent in 2020. Now, what are they saying might prompt this? They were able to actually raise quite some capital because of the fact that the interest rates were low during this pandemic. And they have also pointed out that consumer behavior and mobility have improved over the past couple of months. But he did caveat this, saying there might be a second wave, and that could also, of course, change the situation. Meanwhile, you've got the Ayala Group actually ordering 450,000 doses of AstraZeneca vaccines, half of which will be donated to the government. Now, speaking of vaccines, just a quick touch on that. The UK has already started the Oxford AstraZeneca vaccination program also yesterday. So recall that they're going to be the first to be using this specific type of vaccine. And finally, still on the topic of conglomerates, just a quick peek at San Miguel. San Miguel has now bigger plans also. They are now expanding, or planning to expand at least, Masinloc. That's going to be 73 billion pesos expansion. This is a coal-fired plant over in Zambales. They will be adding an additional 630 megawatts to that Masinloc plant. And meanwhile, their airport franchise has also now lapsed into law. So this happened last December 20. So under this law, if the president doesn't veto this franchise, they will actually now officially have 50 years of a franchise to construct, develop, and of course maintain the airport over in Bulacan. Now, more on markets later on in the broadcast. Yes, we've got with us Regina Capital's Luis Limlingan. Meanwhile, you've got more on the PMI issue that we broke yesterday. Of course, still in contraction mode. How did we fare compared to the rest of ASEAN?
All right, it's sad to say, Dan, we're the only country in the region, at least in Southeast Asia, which saw manufacturing output actually shrink further in the last month of the year. When you try to compare that to the likes of Vietnam, Indonesia, Thailand, and even Malaysia here, it would show that their manufacturing output actually, at least somehow, saw an improvement in the month of December. Same, of course, for Malaysia. They're still, like the Philippines, in contraction territory, but still, they did see their manufacturing output improve in December. That's coming from 48.4 in November. Malaysia's manufacturing output actually rose to 49.1. Now, as for the Philippines, let's zero in on what happened here in the country. It's like what you mentioned yesterday, it's third straight month of shrinking here. And according to IHS Market, the worsening of the manufacturing sector is really due to pandemic restrictions. At the same time, we have to consider as well the bad weather, the bad climate that we had in the last month of 2020. Likewise, they also did say that the rate of decline in the Philippines is actually among the fastest in the series history. At the same time, all throughout 2020, if you try to take a look at how we fared in terms of PMI, we only expanded twice. That was, of course, in January, February, and the surprise expansion back in September. Now, IHS Market did say as well that production downturn and muted demand actually led to firms cutting their workforce, primarily in efforts, of course, to restructure their workforce at the same time due to voluntary resignations. But IHS market economist Shreya Patel did see, or seeing some bright spots here for the country. They did say that new orders actually is looking stable at the moment, and its sentiment is recovering to pre-pandemic levels. So that should somehow bolster the sector's output. At the same time, cases have moderated in a way, but that, of course, we might see still a surge according to the DOH come January. But at the same time, they're still expecting that restrictions might actually be eased in the future.
All right, Jess, so not necessarily performing as well in terms of recovery as the rest of ASEAN, but meanwhile, you've also got China, which seems to have, cooling as well in its PMI. What does this mean for the rest of the region?
All right. To be fair, they're still in expansion territory. That was at 51.9 in December. But what you did mention, there was a bit of easing there from the 52.9 peak that they had in November. That, according to some economists, might actually signal that production for the rest of Asia might also see some cooling. That, of course, was dragged down by weaker output and new orders. But at the same time, if you try to take a look at some of the Asian superpowers here, the likes of Japan, Taiwan, and South Korea, all of them did see an expansion in December as well. And I think we have to zero in on what happened here in Korea. They, of course, being a bellwether for global trade, South Korea's PMI reading is often held up as a gauge, of course, for future demand. Firms that are, of course, reporting further increases in both output and new orders in the latest survey period. Optimism is high still, of course, in South Korea as the pandemic fades further. So moving forward, economists are saying there's a better condition signaling a recovery. At the same time, there are still challenges up ahead here. That, of course, includes a possible surge in infections in the region, which may once again disrupt, of course, the supply chain, jacking up costs here. At the same time, we have to consider as well our trading partners, major trading partners, at least in Asia here, with winter months already in, and that could already lead to further spread of the virus, tempering external demand once again.
Okay, Jess, so definitely not yet out of the woods when it comes to our manufacturing sector. Now we will be taking a short break. Stay with us. Business World Live will be back.
Good morning. You're still watching Business World Live. I'm Jess Delos Santos. The country's tax agencies surpassed their downscaled 2020 collection targets. That's according to preliminary government data. Philippine Star reports that the Bureau of Internal Revenue's initial collection figure for 2020 reached 1.8 trillion pesos, at least 12% higher than the revised target of 1.6 trillion pesos for the year. The Bureau of Customs, on the other hand, said it was able to raise 540 billion pesos, up 6% compared to the revised target. Both, however, are lower when compared to 2019 collection figures. The agencies had to revise their collection targets in 2020 following the impact of the pandemic on taxpayers, community lockdowns, and hampered revenue generation efforts as early as March last year. This year, economic managers have set a revenue program of close to 2.9 trillion pesos. The BIR is targeting to collect 2 trillion pesos, while Customs has yet to disclose its target for 2021. The Transport Department is looking to roll out a cashless transit card payment system this year for all modes of public transport nationwide. That's on top of working on national standards for transit cards and readers for the system. The DOTR says this aims to improve public transport services in the Philippines by providing convenient payment options to the riding public. With this technology, the government promises a more secure payment system and eliminate card issue and management costs for operators. The department also revealed that it staged pilot tests of the transit card readers on 3 PUV routes last month.
Now, the value of government transactions processed by PayMaya soared by a whopping 1,200% in December of 2020 from a year before. Now, with the COVID-19 pandemic affecting daily life, PayMaya said the government has turned to digital payments to process revenue collections and distribute financial assistance in a safe and convenient manner. The company said more than 60 national and local government agencies are now using PayMaya for taxes and fees transactions. PayMaya also revealed that it has reached 28 million users through its platforms as more Filipinos are using e-wallets for contactless transactions during the pandemic. Transactions on the PayMaya app registered triple-digit growth rates throughout last year, peaking in May with a 1,000% year-on-year growth. Here we are back in the swing of things, but which way are we headed? Here to share with us his views on the markets today, we have with us Luis Limlingan of Regina Capital. Good morning, Luis, and welcome. Hi, Luis. Okay, I hope you can hear me. There you go. Okay, just generally speaking, let's kick off with the global front and what's happening here in the equity space when it comes to 2021. You've got infection stopping 85 million already globally, but you've also got vaccine rollouts all over the world. This second strain going on, and our rally globally that we saw on the last trading day of the year, especially over in the US. What's the sentiment here when it comes to global growth, global recovery, and just the equity space?
I think the pace right now of the recovery is what everyone is guessing. If you look at the list of ratings agencies, analysts, and economists who are giving their outlook, some are saying that there's a possibility we're going to grow by close to double digits. Others are saying that, well, the vaccine is going to take a while before it comes here, and because of the pandemic still putting us, or really putting a handcuffing business, they're thinking it's going to be low single-digit growth, right? So those are some of the considerations they're looking at.
Okay, and when we compare how we've fared, at least during 2020, and how we are going to look like in 2021, we were just reporting the PMI figures. Do you think that the Philippines is sitting out the recovery when it comes to these numbers?
Comparing previous seasons and quarters, I think, people are really torn. There's no consensus view before, whether, let's say, it was growth, inflation, or what sector. Because I think this this is a time when everyone is making so many different assumptions as well, because it's a moving target. Everything is changing. There's uh, the the parts are always moving. Whether it's just a vaccine, where it's coming to development, and now I think everyone is trying to learn about the strain, and everyone is a layman at this point, except people in the medical profession. So we have to try to understand it and make our predictions as it comes along.
Do you feel that if you're just looking at the number of cases, daily cases here in the Philippines, that we are nevertheless, we've moved on at least from the above 1,000 cases, and we've managed to control things. So even as you say, there's still some downside risks. The worst should be behind us.
Again, everyone is looking at the number of cases. Obviously, uh, at least the positive, there hasn't been any spike, and people are hoping that's the case. There was a bit of a worry because of what happened during the Christmas season, that people are going out of their normal routine during the pandemic, and they're meeting up with their relatives and friends, which they should try to keep to a minimum, and that might cause a surge. Uh, so at least that one I think is being contained. But again, I think people are on the fence whether or not it's going to be a late reaction, or people sometimes they might not even be reporting it if they feel some symptoms as well. So those are things up for consideration. There have been some hotspots. For example, let's say at least in Metro Manila, it's moved. Let's say I think some days it's been in Rizal, it's been in Davao, but I think the numbers at least have been manageable. At least that's why people are still trading sideways at this point.
Luis, quick reaction on the inflation print for December. So 3.5% compared to 3.3% consensus, higher than expected. Is this actually a positive thing, which means that people are spending more? There's more demand for money. And how does this bode well for the interest rates that are now quite low, or low at record lows even?
Quick reaction. Obviously, it was higher than what we expected. Us along with the consensus. Second, I think people are also looking into the numbers. I glanced at it quickly. Most of the contributing factors was mainly with food and transportation. Those were the main drivers. Is it related to the typhoon? I think that's what the main. I think that's what the main view is. I think there's a heavy typhoon in November. There were strong rains still in December. So that probably led to the spike in prices. Oil has seen a recovery as well. So that is mainly what people did not really think that it would really be a big contributor. Now, uh, as to whether it's good or bad, I think at this point it's more of a negative, because we're experiencing negative growth. If we were experiencing high growth, usually that leads to hyperinflation, right? And then you have the necessary tools to control that. But right now, I think we're trying to jumpstart the economy. We want to keep inflation at the minimum. Even if we're experiencing negative growth as a result of the pandemic and prices are spiking, that's really going to work against our favor.
Okay, and finally, just a few specific stocks that I wanted to talk about here. You've got AC Energy. Any insights on that? Why that keeps surging higher? I mean, this is something that has been going on since last year, and even that deal with GIC was already announced on November. Why the continuing belief in this? And do you believe that it's still time to be picking up the stock?
Well, you can see that the company since last year, despite the pandemic, they've been making aggressive plans to expand. I think the the thesis has been that the developing markets are on the transition phase to renewables, and at the same time, I think they've mentioned that aside from this, from what they're planning, that they're already even forecasting a rapid expansion in terms of converting to renewables and readjusting their portfolios. So they're really making, I think, all the necessary changes. Perhaps people did not expect this because of the pandemic, but AC Energy is showing that it's business as usual. In fact, they're very optimistic and aggressive. despite what's happening, I think since they are looking at the long term, there's no reason for them to be taking a pause, because I think when that takes into effect, perhaps the pandemic, will be nothing but a memory at that point.
And finally, on the AC front, what do you feel about the parent and conglomerate here, especially as they have already mentioned that 2021 will not be the same. They will not be going back to pre-pandemic levels when it comes at least to retail spaces.
I think with AC, along with the other companies, they're just playing it safe at this point. And I think, these being cautious is warranted right now. Yes, there's a vaccine, but second is how long is it going to take for it to arrive in the Philippines, and be, I guess, for the population to receive this, massively. So at least we get into herd mentality. Second is the after effects of the vaccine. What industries will probably do well, what industries are going to be severely affected and are going to be taking long. So I think they're taking all these things into consideration. That's why they're giving these guidances, being cautious, but at the same time, again, they want to be banking on for a recovery probably by the second half of the year.
Okay, so still cautiously optimistic, as of course they were in 2020. That continuing to spill over as AC Energy trades down by 1.2% this morning. Thank you so much for those insights, Luis Limlingan from Regina Capital. That's the first look into the business day. Today is January 5th, 2021. I'm Danie, Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess Delos Santos. We are One News.
Now na?
Sige, kausapin mo na.
Hi, Mase. Morning.
Hi, good morning.
There, super clear.